Hey, what's up, everybody? What's up? What's up? Hopefully, everybody's having a great week overall. And last week, hopefully, everybody had a great week as well, right? So we're gonna look at a few tickers this week. There's so much going on, and there is a lot of setups everywhere, a lot of confusion too, a lot of indecision in the overall market conversations, things that have to do with recession and inflation and war with China, and then I don't know what else is going on. I guess the main thing here that everyone fears is the war between China and US. Now, yes, it's a scary thought, and a just to even think about it kind of makes us wonder what a what if scenario. But we're not here to talk about the what if. We're not here to talk about the fear in the conversations, right? We're here to talk about a break of a pattern, a break of a level. That's what's gonna help us traders, day traders, swing traders, short term swing traders be more successful because we're not here to be biased just because there's news talks about US and China going to war doesn't mean we got to start loading up on puts by no means because what if nothing ever happens? What if nothing comes about it? You literally just loaded on some put plays and hedged with some put plays according to false data, to fear-based news and conversations. So you lost money for no reason. I mean, I might as well just send you my Venmo and you can just send me the money while you're at it, right? If you want to give away free money, by all means. So we're here to talk about the break of, the continuation of, the rejection of, and anything that's going to help us identify direction. That's it, right? Be aware that there is news out there. Okay, I'm not taking anything away from the fear that's out there in general, but I'm making sure that most of you come in without a bias and you're looking at the chart and the chart alone, therefore respecting the chart levels. If you can't respect the chart levels, then you have no reason to be trading. Okay. So first things first, we're going to break down this ES, nice solid uptrend, and we are still on a nice downtrend. All right. So let's take a look. So what you want to do here is you want to grab the top of this wick and you want to match it to this wick. So most people are going to have this trend line in general. So yes, we are still kind of like a nice little downtrend here. So this channel hasn't changed since the beginning of the year. Yes, we do have uptrends short term and longer term. We are on a bigger uptrend. So there's nothing taking away from the bigger view and perspective. And also you can't take away anything from the shorter time frames. Last week we talked about this important doji, and I told you guys that we only had two levels specifically that I was going to look for, and that was literally that candle body. I said if we start going above, think bullish. Okay, that's what you got to do. If we start dropping below, think bearish. All right, so we ended up bullish. We ended up bullish for the rest of the week. So the doji basically gave us the boost in order to keep on trending back up on the break of this little pattern that we had here, all the buyers that showed up based on these wicks, they're still here. The fact that this candle body closed above all this structure and the pattern that we had down here continued with this candle with the doji right at a supply level. So this is the supply that we all talked about that we were going to retest. So that doji gave us the confirmation that the bulls are still in control this week. So this previous week that just passed. A lot of you guys made tons of money to the upside. Some of you guys got caught up trading puts because you were biased. But again, you probably might have not watched the video based on the doji or understood how the levels are working. Therefore, we're talking back about these levels again, right? So what do you get after a doji? That's the question that a lot of you guys may ask. And maybe you guys said, oh, well, there's no volume. Well, technically, this is normal volume. Okay. What you guys have been experiencing in the past is volatility volume, meaning that there's tons of fear in the market. And the fact that we have indecision will drive something down, up very aggressively, giving you more volume in the market. So an excessive amount of volume. This volume that happened here the past few weeks has been normal. Okay. So there's been volatility, maybe like the intraday stuff, but in general, in the bigger picture, it's back to normal trading. That normal trading means you're back in a nice bull market. So and we're trending back up very nice. So a lot of people took advantage of that, while some got crushed. Okay, sad to say, but it's the cold reality and the truth about it. Now you just got to learn to face the facts and know that maybe we were wrong or we were right, whatever the case may be, and move on, right? Whether you took a win or a loss, move on to the next day, move on to the next trade. It's all new, and don't carry any of that negativity or the habits into the next trade. So what do we have here with ES? We're hitting this point of resistance. It's going to be that 43. We haven't touched that 43 at all. We almost touched it on the 4 hour. So I don't know what to expect here, guys. This trend right here is very nice. This is called a staircase pattern if you don't know what this is, right? So I'm going to show you guys what a staircase pattern looks like. And we were trading sideways right here for quite some time. All right. So once that broke out, we got the retest. And then we created that staircase pattern. All right. So here, I'm going to show you the staircase pattern. There it is. There it is. And there it is. So you run up, you go sideways, run up, go sideways, run up, sideways, run up, sideways, run up again, sideways. And I don't know if we're going to do this, or I don't know if we're going to do this, or just stay inside anywhere in between these levels. Not expecting a lot this week, only because there's going to be some Fed speaking, and we've been running pretty aggressively, pretty nice. So if you guys see red candles, start thinking dip buy, okay? Until you're proven wrong. Right now, the pattern and the trend is up, so there's no reason to fight this at all. If you're going to be trading puts, make sure you're taking profit and trailing your position as much as you potentially can. Don't bag hold those puts, even if you get this crazy red candle. Now, if we start breaking below 41, then I would tell you, please consider grabbing puts and be aware that the rejection was heavy. But as of right now, we're still on the staircase pattern, and please respect the trend, okay? I'm not going to give you too many levels for this just because it's still staircase. So the best way to use the staircase is use the previous day base, right? So for example, we're looking at this right here, and we closed pretty bullish on Friday with a relatively very low volume. Okay, there was a super low volume. This is just like way too low for me. What you want to do is, if you see this little base right here, so basically the all the price action that happened here was created a nice little base on the 4 hour time frame. You want to use this as a dip buy. If you use that as a dip buy, your stop loss is legit, like right there. So there's no reason for you to bag hold that position. Now, if it drops even further, maybe like down here, I'm just gonna say like this little piece here, then you would look for a dip buy right there as well too. Either way, you can still short it from this piece, that 4208, down to this 4150 or even 4166, 65 around there, right? That's kind of like what you want to do, and this is the only two levels that you really need right now for dip buys. If you want to get a little more crazy, then you want to come down here and get this piece down here. So this is the 41 level. This is where it's gonna create and look like a huge bearish red candle. If that would have happened, then I would warn you guys that start trading your puts, right? But we're not there yet. But either way, we could drop down into these next three levels. So that's how you want to see it: the 41, the 4150, and the 4210. Those are the good areas to start looking for buys, or just to see where your market is going to be, right? As for NQ, same thing. We're kind of just trending nice. So you would do the same thing that I just did with /ES. You would go back and just look at the little structure that it built. You would use that. And I'm gonna skip all this here just because that's some intraday stuff, and then go down here to the main one. So I would look at that. If you want to grab that middle piece, that's fine. Totally up to you. But look at it like that, okay? Grab the basis top ones. The top and bottom ones are the ones that make more sense. Those are the ones that have the better dip buy opportunities, and those are the ones that have more strength, okay? Same thing for RTY. Let's look at RTY. RTY has just been blasting on up, and it hasn't even stopped. I actually tried to short it here, and let me tell you why. I tried to short it. It created this nice little doji, and this next candle ended up being red. So I was assuming, okay, well, if we're going to reverse, it's going to be on Thursday for RTY. And since we ran pretty much from this point all the way there, and then we created a doji, I was 100% comfortable grabbing a put position here as a hedge. The hedge is because now you're fighting a staircase pattern. You don't ever want to fight that staircase pattern until you get a proper reason. The reason here was that doji, so I grabbed it, I played it, and the next day I got stopped out, of course. But I knew my risk and I knew the setup, even though this candle showed red, the continuation did not happen. Therefore, that doji didn't even matter. And all it did was create more momentum to the upside. That's all it did. So sometimes you just got to be careful and be aware of who you're fighting and what you're up against. In this case, I was up against all these bulls with a nice doji that gave me for a bearish position with no bears showing up besides me. All right. So that's how I ended up getting stopped out. And that's okay. No big deal. Cut my loss, move on to the next one. Don't let it affect me. As for oil, guys, like I've told you guys in the past, it's still trending down. It's probably going to continue to trend on further. And this is the area where I'm going to look for a dip buy down here around that 80 to 84. Still, the levels remain the same. If you guys see me posting oil probably like next week or so, we're going to look for a dip buy down here. But we'll come up to that later. As of right now, keep shorting oil, except for like XOM, Oxy. The tickers themselves are actually moving on up. It's kind of weird, but yeah. As for gold, we talked about gold last time, and I told you guys that right now it's moving normal, and it's not really an inverse to the markets. What's happening now? It reclaimed its demand. It literally bounced off of it, and it's still trending on up. And I think we might come back over here to this 1900. Probably with some time, of course, but gold, nobody really trades it. Just know, keep aware, stay aware that if we do go with a to war with China, gold would be the first one to long, while ES, SPX, and SPY would be the ones that you guys would short like crazy, right? But we're not there yet, so it doesn't really matter. Okay. As for the VIX finally dropping below that 20 level. Can't really chart it, guys. Just so you know, you cannot chart fear. Fear cannot be charted, okay? It all becomes psychological here. You got your 2019, 30, 35, and, whole numbers. What happens here at these levels is the market is back to stability, meaning that there's going to be a lot of low volume, which is it's gonna look low, but it's gonna be normal volume. All right, that's the difference. The difference is that there's no volatility in the market, and this is what I explained earlier, that the trends may look like low volume, but it's normal volume according to the normal stability of the market in general in stocks. Now, if you see volatility go crazy and a major catalyst happens, then yes, we will look at the VIX for maybe like a run up or a green candle that may cause fear, while the market goes red aggressively with aggressive volume, meaning that more people are selling and some people are getting stopped out, which is the buyers, and the bears are taking control. But in that case, or as of right now, everything is still stable. Even though we're in a recession, we hit the second GDP negative. It got avoided by some wording, but either way, we are in a recession, and there's no taking away from that. So just because we're facing recession and inflation and all that doesn't mean that the chart won't break above and won't break below. You still got to respect those trends, right? As for the dollar, I'm gonna go on the 4 hour. This is a nice trend to the downside, guys. Let's see. This piece here was a nice break of a downtrend. Okay, we were kind of this red candle was one of the some data that came out. I forgot. But anyways, we ran on the market and the dollar dropped. So this piece right here is your 50% retracement. I do expect some more downside for the dollar. So if you guys trade Forex, consider shorting the dollar at 105.70. So basically where it's at right now, you don't want it to break above, and you just want to continue to the downside from this specific candle. Okay, this is your point right here. This is your entry for puts, and your stop loss literally is that wick. If you get stopped out, reset your alert and come back inside. But I'm expecting this to just come on down. It's time for a reversal for the dollar. It was time for that reversal for the markets, and let's see what happens. All right, so I'm giving you guys a short entry here and trade idea that we may trend to the downside. So I have my alerts. I'm gonna set another alert here just in case for all you Forex people, or just stay up to date. Okay. All right, so let's go look for a few tickers. What I want to point out is SLV. This is silver. It's a very slow moving stock, but the trend is very, very nice. I like this trend. I like that if it breaks this piece right here, that 1920 level, we're probably going to continue up, down, all the way into this 20. That's kind of like my targets. Okay, maybe you guys wondering why I did that. Let's do this. This is the piece, 1987, year I was born, and 2028. All right. Right there. These are my targets for SLV. I think it's going to be a good mover. So if you're going to dip buy it around 19. So all you got to do is draw this little trend line and watch for a dip buy anywhere in here. Okay. Dip buy. And then if you get in, your stop loss would be right here. Okay. So that's what I'm going to look for, or the continuation on the breakout, whichever one comes first. Today is Sunday, and we may gap up or gap down, whatever comes first. That's what I'm going to buy. Again, over that 1920 or 19 dip, and right below is your stop loss. All right, SLV. The next one is PayPal. PayPal, after earnings, it crushed it. The one that I missed for the upside, but it's okay. It actually got a nice retest here, and it just ran and it ran and it broke this accumulation phase. It built this little weird little falling wedge flag pennant type thing, whatever you want to call it, and it broke above. So if this thing breaks 102.50 this week, I think it can be very good. And the cool thing about it is that PayPal and SQ together, they make money off crypto as well. Some crypto payments or some like that. So since crypto is running up very nice, and since PayPal and SQ kind of held these grounds while the market was doing its thing, I think these have great potential to catch more attention. So we're gonna look for some targets here for PayPal. Let's see, PayPal. All right, so over that like 102.50. Okay. First target's gonna be right here about that 105. We're gonna do 105 and let's just say 110. Yeah, let's do 110 right there. This little piece right here. So 109, 110. That little piece, and then I just want the top of this right here. That's it. That's all I want. Two targets for the week. All right, so we break 102, 102.50. I'm looking for a run up like this, okay? All the way into that 110. So that's going to be a good play for PayPal. SQ, same thing. It looks very, very good right here. The fact that we have some rejection up here, but the buyers keep showing up is very, very nice. So it's more of a squeeze play, and it's squeezing right in supply. So all this supply here, okay, all this supply, all this, we're inside of it all, and we're squeezing. So again, with crypto running and SQ having to do with some crypto, I think this is going to catch a little more attention. And once we break above this piece right here, this like 92 and 94.50, we're going to hit this next zone right here. I'll check it out. 98 to about 100. And then we're going to look for the top of 108. Yeah, we're going to look for 108 and like 107. So that's what I'm doing. I'm grabbing the squeeze play. The fact that we traded range here and we dropped down and we held, the earnings came out pretty decent, not too bad. And the reason you can tell that it's pretty decent is the fact that it didn't keep trending down and it actually held its ground. So nice pullback. Give me a reason to pull back and dip buy and start breaking to the top of 100. So I think by the end of the week, if SQ and the market just holds, I think we will hit 100 first. And then we're going to look for that 108, 110. So if you guys grab some calls, let's just say we're bullish on Monday, I would recommend the September 2nd so that you can actually hold a longer position and grab like the 90 call or the 89 call. If you can, in the money, be a little more aggressive. Otherwise, I'm going to be trading some 26 or 19s. I think I'm already in the 19th position. So this 90 call looks pretty decent for the 26. Not too bad if you grab that and play it all week and just let it do its thing. I think that can be a good play for SQ. And I think I have the 90 calls for the for this week. So the other one is going to be V. This is more of a side chart for you guys if you guys just want to check it out. Here you go. Here's a nice little trend line. Here's a little trend line. Here's a squeeze. So Monday it's either going to break above whatever the pre-market is. I would say like 212 though, honestly, like 212 or that like 210.40 or just 210. Just watch out V. Watch for a good push, either up or down, and just set some alerts. All right. Next one's going to be JPM, guys. You guys know that I've been following JPM, and I actually caught a lot of this move here. I entered here, and then of course I ended up taking profits here, and I'm still going to continue to follow this. I think JPM just started, and it needs a nice little pullback. So if we can get a little pullback in financials, I don't care what kind of pullback it is. Give me a pullback anywhere in this area. I want to buy it. So if this week we could just kind of trade sideways and hold above like 120, I want to be able to buy this position and roll on up all the way to this like 124. From 124, I'm looking up for these like 130s. I know it sounds crazy, but JPM is the one that's behind all the financials. So I'm going to continue to monitor this for the staircase pattern for the accumulation phase, and just keep on rolling on up, right? Google's the other one, guys. From the last time that we had this watch list, we said that Google over this like 118, 120 will continue a new trend. And I'm actually looking for this 122.50, 123. Okay. Above that, you're going to look for 125 all the way to 130. And Google's looks like it's going to start a brand new trend here, and probably catch up to Apple. If you guys don't know what Apple looks like, this thing has been trending up like crazy. It's literally nonstop for Apple. Like it's literally the tightest range. I mean, channel to the upside. It's like what's stopping it from hitting all-time highs, right? In the middle of a recession and inflation and I don't know, war, like Apple is still just about to hit these all-time highs. As crazy as that sounds, right? Look at that. It's like nothing ever happened and Apple made up its profits within like 2 months. 3 months. So it's pretty crazy. So congrats to everybody who bought shares for Apple. BA is the next one for the watch list. What we do have here is some wicks here. So I like doing the wicks on BA just because it's more of an aggressive ticker and it moves. Okay. So over 172, or better yet, 170, 180, 170, 176 if you want to be exact. I'm going to look for the breakout on BA. And I'm going to be looking for about 180, to be honest. There's not a lot of structure up here, and we're right below it. So, all right, so this is what we're going to look for. We're going to look for this piece right here, which is 176, 180, 179, 179.30, 50, around there. And we're just going to look for that straight 180. Yeah, I'm going to just look for 180, guys. I'm not going to go too crazy on this one. So I'm going to look for the run up first over the 172 all the way to 176 and then 180. That's it. That's the only levels that I'm giving you for BA. Look for a good dip buy. If we hold here on Monday, let's just say this piece right here. Okay, the 168. This is your dip buy with your stop loss at 167.50. Okay, very easy. If this continues to break 170, you can enter your long all the way to 172, take profit. If it breaks 172, at least trail your position and continue, or enter a new one. But consider that a breakout, and your stop loss would be right below. Okay, so that's BA. Very simple trade here, and just let it run, let it do its thing. Another one is AMD. It's just a pattern setup here. It's very tight, has a lot of pressure, and it looks like it wants a reason to pop. Okay. What I do notice though is everybody's going to notice the fact that volume has kind of slowed down, which again, I said earlier is a good sign. Okay. It's not bad. You want to look for an increase of volume on the break above or the break below. Very simple. Okay. Use the pre-market levels to help you and guide you. Shop is another one that I want to keep track of. and the reason for that is because we're kind of retesting this level here. Okay. And we're holding above it over this huge range. So almost like that Google trade, the PayPal trade, the Disney trade, Um, the Tesla trade that was range, anything that's range, if as long as we're holding above that supply, it usually gives you a better opportunity to go long and switch price action, which you're gonna end up going bullish versus bearish. So I think shop, if this thing can crack this, I'm just going to use 42 and 42.40. I think we have a opportunity to go long on shop. Okay. So this would be your breakout entry. This would be your dip buy entry with your stop loss right here. Right. Super simple trade. And your target for the week is going to be here. So that 45.35. All right, we want the bulls to take over. So if we do take over, that's the level that it's going to hit. I think grabbing a swing for shop would be pretty awesome if we continue with a bullish market. This could actually be a nice hold all week like this. I think that'll be pretty a pretty nice hold. All right, so I'm going to give you another one. This is a side chart. I want you guys to check out TWLO and kind of see what it's doing. Stay alert on this. And just by looking at it, you guys can basically see what I see. If you don't, then please feel free to DM me. Find me at Conservative Collectors. And if you're not part of the team, high recommendation you join us, right? Check out TWLO. But anyways, I'm going to leave you with that watch list, guys. Be aware this market is still on an uptrend. Shorter, bigger term, we're still on a nice downtrend in general. So a lot of indecision, a lot of fear out there in the market, but not too much fear for the buying. Okay. There's the dollar may reverse. We are looking at ticker continuations for SLV, PayPal, SQ. Okay. We're looking for a pattern squeeze break on V. We're looking for the continuation for financials on JPM, one of the biggest ones. We're looking for a new trend for Google. We're looking for a squeeze play on BA, and squeeze plays can be a little more aggressive. We're looking for a pattern play here on AMD. We're looking for the change of price action, meaning we're going to go bullish above supply, and the confirmation is going to be 42 all the way to 45. And TWLO, guys, I just want you guys to check it out. Tell me what you see. Use it as homework, set some alerts, and have fun with this because I think it's at a great spot right now. But other than that, be aware XLP is at a little resistant point that honestly may break out this week. We do have some earnings on Walmart and Target. So these are going to be talks of the week. These are more retail, and it has to do with a lot of shopping. So if people are spending, then they're making revenue. If people are not spending, they're probably not making a lot of revenue. As you can see, the previous reports, these actually dropped heavy, which is good. And they kind of just been doing nothing since then. So be aware, those have earnings. Also, the other sector that's going to have earnings, it's low and HD. I think, in my honest opinion, guys, I think HD is going to beat. Okay, so I am personally going to be taking some calls on this. I'm letting you know now. What call don't matter. It's a lotto, so I'm not going to give you that. You put in whatever you want. If you're bearish, by all means, get some bearish lottos and do your thing. Have fun. Good luck, right? But in general, my honest opinion, I think HD will actually beat this time around, and we're probably going to see 340 as a target right here. That's my first target, and then my second target is going to be around that 350 and 345. These are my targets for earnings for HD. Doesn't have to hit there. I mean, it can do whatever it wants, but that's kind of what I'm betting on. All right, and I'm gonna put my money where my mouth is as a gamble, 100%. No TA, no nothing, just the targets and my thought process about HD. That's it. But either way, be careful this week, guys. Have fun. Congrats to all the bulls who are swinging, and congrats to the bears who are swinging too. Makes money either way, and just have fun. And don't forget, Tesla does have a stock split coming up. So if you're holding leaps, I don't know what's going to happen to your contracts, but it's going to have a split on 8/25, which is next week. And right now, its current trend, we are still in a supply level. But just look for whole numbers. Honestly, if we're breaking 900, look for 910, 915, 920, and things like that. It still looks, honestly, it might hit that 1K by next week. And And then after that, just have the split, right? So yeah, guys, enjoy the watch list. Have a great week. Stay green. Be patient. Don't get FOMO. Don't change. Have some discipline. Have some structure. And whatever you do not trade on bias. Okay, if we're breaking up, go up. If we're breaking down, go down. Just make sure you stay green on your positions. All right. Have a great week, and I'll see you guys next week.